What's up, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY and talk about why I am a bull and a bear simultaneously in different ways. I'm going to talk about why I think there is a lot more upside potential coming to the markets, at least as we approach next year. But there may be those moments where we get those sell offs, kind of like what we saw this year, because of different economic factors. So let me just say that I am not a financial planner. Make sure you take nothing I say as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $1,000, you're guaranteed 15 in total, not to mention 8.1% APY on uninvested cash. Anyways, let's talk about the markets. So, what do I think about the markets? Is the market going to crash? Is the market going to continue to run? Well, it's very, very simple. Just to start things off, let me just delete my old lines, just restart completely. So, SPY has this very, very critical support that's coming up right over here. If we take a line like this, you guys could see that around this 585 area, we have previous support, previous resistance becoming support. And what that means is this could be a level that SPY may attempt to bounce off of. And if we don't bounce here, we could technically dip to about closer to 580. If not, all the way down to fill this gap, and then we get the bounce. So it all depends on this level. Do we get some kind of bounce here? I do believe SPY will attempt to fill this gap above one day. So either we're going to just dip a little bit more and get an end of the year squeeze to start pushing back up to fill this gap. We may see something like this where we just continue to push towards the end of the year and then we eventually break all time highs and rally just like this for one last squeeze. Or what could be happening is we're about to see, a continuation lower, closer to where our 50 EMA is about to be. And we just try to fill this gap first before we get some sort of bounce and then continue to pump right back up. And we get an end of the year squeeze all over again, back to new all-time highs, right? That's most likely what's going to be coming as we have a tendency of kind of pumping, rejecting, pumping, and rejecting. So we had a interesting pattern where we, ever since August, right, we got a bounce very close to our 200 EMA, the red line right here, and then we bounced. We came back up on the daily, and then we ended up holding. So we dipped below our 50 EMA, then only to get bought back up above it. So we held very close to our 50 EMA here, the yellow line right here. Then we bounced. We held the green line. This is our 20 EMA. Came back up to our resistance very close to 586. We dumped all the way down to the yellow line again on the daily. This is our 50 EMA. Bounced again. And either what's going to happen is we're going to bounce near the green line. This is our 20 EMA, the green line, which aligns. So it's a confluence of supports where the previous resistance was becoming supports, and the green line, which is our 20 EMA, we have a double support or a confluence of support here, which could be leading to a bounce. Or if we don't bounce there, we could end up dipping closer to our 50 EMA and try to bounce off of that. So we'll just have to wait and see which way we end up going. We're still kind of stuck right here. So we still have more upside towards the end of the year nonetheless, even if we do get some kind of dip. Now, let me just say that there is potential for this to pan out as long as we don't lose our 50 EMA. As long as SPY bounces off like 576, we should continue to get that squeeze. But that does not mean that I'm going to be bullish forever, because there could be a corrective phase that comes to the market again because of a potential recession. Now, the recession has not been announced, and as of right now, Jerome Powell is continuing to say the economy's fine, everything's going to be okay. But we're still in a high interest rate environment, and its effects are still starting to show as unemployment numbers are continuing to start going up a little bit. And then simultaneously, we're seeing weakness in job creation right now. So we're actually seeing some weakness. Now, from the way I see things, I don't think that a recession is going to cause a crash, though. That's going to last forever. And this is going to sound very, very counterintuitive, but listen to what I'm trying to say. The market is very much a game. And you have these market makers, these institutions who are continuing to play retail. They're continuing to look at your data. They're continuing to squeeze the markets because everyone keeps on shorting the hell out of the markets. Okay. So if there's some kind of corrective phase and the market dumps, okay, I don't think it's going to last forever. I think that it's going to be very similar to what we're seeing right over here. And let me show you what I'm talking about. The market's been very bullish these last few months. Just look at how the market squeezed this year. In fact, we didn't enter a longer phase of correction, at least since like the end of 2022. The market's been bullish since then. But notice that since 2022 ended, look at 2023. We got this like squeeze like move. We had a temporary dip for about 2 months. Then we continued to squeeze. We had a temporary dip for about, what, 3 months, then we continued to squeeze. We had a dip for 1 month, we squeezed, a dip for about a month and a half, we squeeze. Now we're entering a small dip. Do you think the dip is gonna last 4 months? I don't think so, guys. I think we're gonna get bought back up again. That's the trend the market is on. We just see these short corrective phases for 1 to 3 months, then we just continue to squeeze and squeeze and squeeze, and the bulls have had full control over the last 2 years in the markets. The bulls are the ones who have the bigger edge. So, what does this mean about the future? Well, what tends to happen is when we get breakouts, we do like to test previous all-time highs, and you guys can see that this is where the breakout happened to be on SPY. So right here, typically, especially as we enter recessionary years, if we are going to enter one, we do tend to retest the breakouts, right? We have breakouts to be watching for at these particular levels. So I personally think that what's going to happen is this. I think we're going to see the pump and dump market continue. And I think that's because of the election, they were pumping the market so hard, but the recession is still yet to be announced. I think that it's still a possibility, a very strong possibility we are going to get that announcement because of what we're seeing in the jobs markets and because of what the Fed has to essentially manage. But that does not mean I think the stock market is going to crash forever. So if the market were to get a corrective phase, let's just say there is some kind of recession or something like that's announced, we could retrace back down to this level right over here, right? Back down towards the 560s. We could see a slow dip all the way down there. We also have a gap to fill. We have some gaps to fill on SPY all the way down to these lower levels, even into like the 550s. So, some of those gaps could get filled. But even if that's the case, it doesn't really change my view for how this is going to move. So if we were to approach next year, it depends on the timing of the recession. If we see a massive rally into like the 610s, for instance, that could be where this thing attempts to top at. Then we could draw out our fib levels from like this low. So we can actually take it from here. And what you'll see is that from that high, the 0.618 retracement also aligns with like the 650s. And then we have the 0.786 around like the 532 area, just for instance, on a hypothetical basis. That could also be another very, very key retracement area. So if there is some kind of recession, let's just say the economy starts contracting, let's just say something happens to the labor market, let's just say there's fear of a recession. Even if there's fear of a recession, we could get a quick dip again, back down to fill some of these gaps, back down to retest the breakout area. SPY could get like a 10% corrective move. It could even last a little bit longer before we see another big rally and we continue to squeeze to new all-time highs, just like we've been continuing to do. Because the moment there's fear of recession, everyone starts shorting the market and then they're going to squeeze it again and again and again. And we're going to just continue to rally, right? And then I think this cycle is just going to continue to perpetuate where the market just rallies. We get these corrective phases, then we rally over and over and over again until the end of the year. I think that we could continue to squeeze to much higher levels. We'll see like another corrective phase before we continue. And we could even hit the mid 600s, despite the fact that we could be entering a recession or even seeing factors like that. What's one of the reasons? One of the reasons is because of earnings. Earnings have not contracted enough for the market to really tank. And I think that if they do cause the market to dip a bit, what the market's going to do is it's going to find a way to rally back up because that's what the trend is looking like right now. They're going to keep on trying to rally the markets again just to trick as many people who are overshorting the markets. So that's the cycle, right? They're going to pump the market like crazy. They're dumping the market right now. People are becoming fearful. They think we're about to crash. Then they'll squeeze us up to these highs. Once you look at the fear and greed index and everyone becomes super, super greedy, they're going to give the market another rug pull. And once everyone's panicking, there's a recession coming, they rally us right back up. So it's just a game these market makers are playing. They're making so much money. When retail lose money, these market makers make money. They're making money off of us. That's why you have to be very, very patient. So that's what my view is for the markets for now. We just see these short corrective phases, then we just get bought back up. I believe that the QQQ is going to see the same thing, essentially. When you zoom out of the QQQ, you guys could see the same thing is going on. We have these short periods where the QQQ sells off and it rallies, sells off a bit for a month or two, rallies for about 6 months, sells off for about 2 to 3 months, rallies, sells off a bit, then continues to rally. So it's going to continue this phase of a very, very strong uptrend. And I think it's going to continue going into next year. There may be moments where we get those corrective phases here and there because of a potential recession. So if we were to rally again, we'd be like drawing out a fib level that looks just like this. But overall, guys, my view remains bullish. I also predict that Tesla is going to run to $400 a share. It is possible it corrects a little bit as the market cools off. Um, if we lose 300, it could be a buying opportunity. And if we end up losing this like 20 EMA, it is even possibly come down to fill that gap. I'm not 100% sure about that, but I'm just trying to say, guys, my view remains very consistent. And I have a price target of about 400 for Tesla. I think we will eventually reach that. But for the time being, we're just going to be watching these levels. So, what is my view of the market? Am I a bull? Am I a bear? I'm actually a bigger bull than a bear because of the trend the market's on. But I think there will be corrective phases, just like how we saw a couple of moments like this here where the market dumped only to get a big recovery. And we may see the same thing just continue for many, many months to come. I think it's just going to continue with more upside than downside. And we're going to see continuations of like dips and pumps with more pumps to end the year. I think that shorts will be squeezed. I think that the market remains bullish right now. My view could change if we get a bad catalyst, such as a new pandemic or something that's completely unexpected. But for now, I maintain my bullish stance. So, will the market squeeze more? Yes, I think it will. For the short term, we're just waiting to see if the market bounces off this key level. We're very close to our 50 EMA and also very close to this previous resistance becoming support in our 20 EMA. So we'll see how things end up going. Um, about the recession, there's no confirmation of it. I believe it's going to most likely come later on because of what we're seeing with yields and factors like that. But there's no sign from the Fed that we're in a recession. The Fed is just continuing to claim the market's doing well. The economy is in a good place, and that's what's helping the market continue to rally. I believe that that's the view we have to kind of hold for now, and I could make adjustments depending on how things go. But for now, just know that these corrections tend to be short-lived, and we tend to see more buyers step in, and that trend is going to likely continue into next year, unless we get some kind of interference, which could be like something out of the ordinary. If it's like truly a big recession, or if there's like something huge like a new war, that's how the market's essentially moving. In a nutshell, the market's more bullish than bearish, so just keep that in mind. I will go over more details in my video for tomorrow, so I want to thank you all so much for listening. So please have a good day. I'll see you guys very soon. Thank you for listening, and peace out.